Welcome to the channel Get Rich. Today, the company we are going to look into belongs to an IT industry. So let's first have a look at IT industry. So the global IT industry is on pace to reach $5.2 trillion in 2020, according to the research consultancy IDC. The United States is the largest tech market in the world, representing 32% of the total, or approximately $1.7 trillion for 2020. In the US, as well as in many other countries, the tech sector accounts for a significant portion of economic activity. Despite the size of the US market, the majority of technology spending, almost 68%, occurs outside the US. Among global regions, Western Europe remains a significant contributor, accounting for approximately 20% of technology spent worldwide. China has also established itself as a major player in the global tech market. So, according to IBEF figures, the Indian IT industry is set to touch almost $225 billion by 2020. Industry experts and NASCOM predict the Indian IT workforce will touch 30 million by 2020, becoming the highest sector employer. India is amongst the top most offshore destination for IT companies across the world. If you look into the export revenues of the industry, it is expected to grow 7 to 9% year on year to almost $135 to $137 billion in financial 2019. India has become one of the major hubs for digital capabilities with around 75% of global digital talent present in the country. Digital transformation business expected to be over one third of the total business revenue, almost 39% in 2020, up 10% from 29% in 2017 as per Gartner. It develops a productive relationship between businesses and IT roles, which is the key to sustaining digital business success. So the next generation technologies such as industrial automation, robotics, drones, cloud, Internet of Things, augmented and virtual reality, big data analytics, AI and blockchain are the key technologies driving the digital transformation business. So this is all about IT industry. If you have a look into global IT services sector, so it's $539 billion in 2018 and it's expected to grow at 2% CAGR, and digital is going to outperform almost 16%. So if you have a look into the Mphasis Limited, which is the company we are going to look into today. So Mphasis is an information technology solutions provider that applies next generation technology to help enterprises transform businesses globally. Mphasis was formed in June 2000 after the merger of Mphasis Corporation and BFL Software Limited. In June 2006, EDS purchased a controlling stake in this company. In August 2008, EDS was acquired by HP. On 4 April 2016, HP entered into a definitive agreement with private equity funds managed by Blackstone to sell the shares held by it in the company. In September 2016, Blackstone Group, through its fund Marble to PTE, completed the share purchase, and the company has become a Blackstone Group of companies since then. Blackstone is one of the world's leading investment and advisory firms with over $550 billion in assets under management. So this is about the Mphasis Limited company, how it is originated. So let's have a look at the revenues of Mphasis Limited. From which segment, how many percentage is coming from which segment of this company. So first, let's have a look at the banking and capital market. So this takes almost 45% of the revenue is coming from banking and capital market, and then 12% comes from their insurance industry, and 16% comes from information technology, communication and entertainment, and 27% coming from emerging industries. So this is as of 2020. And if you have a look into the current quarter, the contribution to revenue from banking and capital market is increased to almost 53%, and insurance is reduced to 9.5%, and IT, communication and industry is reduced to 11.8%, and logistic and transportation 12.3%, and others was 13.3%. So almost banking and capital market has a consistent track record of double-digit year-on-year growth. So it has a consecutive quarter of 20% plus growth. So, and if you have a look at the insurance quarter on quarter, it has an overall growth of 4%, and it is expected to continue the growth momentum in the coming quarters. And also the ITCE sector, which has a strong growth driven by large deals they won in this quarter. This is about the revenues and where their revenues are coming from which segment. And then let's have a look into how these revenues by segment to segment grow quarter over quarter and year on year. So the banking and capital market is grown quarter over quarter 2%, year over year 30%. Insurance, it's 7% growth in quarter over quarter, minus 1% year on year. And then ITCE, it's 57% growth quarter over quarter and 67 growth percent year on year. And logistic and transportation 8% growth quarter on quarter, minus 1% year on year. And others minus 4% quarter over quarter, and then 3% year over year. So then let's have a look at their revenues from geography, from which market how much revenue is coming from. So almost 78% of their revenue is coming from America, United States, and 11% coming from EMEA, and then 5% coming from India, and 6% is coming from rest of the world. And their Europe share of business is increasing. That's a good thing. So then let's have a look at their revenue by service type. So they broke down their revenues based on their service they are providing. Application maintenance, it's almost 30%, application development 33%, customer service 1%, knowledge processes 9%, and these are the small percentages, and the infrastructure management services is 13%. So if you look into application maintenance, what is application maintenance? It involves maintenance of existing customer software and is mostly undertaken by annuity terms. And also, if you look at the application development, it refers to customized software development services based on the requirements and specification given by customers and documented in a statement of work. So these are the main two sectors or service types their revenues came from. And then let's have a look at their revenues by source type. How are their revenues are sourced from which clients? So they have a direct international business of almost 70%, and also they have a business through DXC Technologies or HP business. So this company is bought by Blackstone from HP in 2016. When they are buying this company, they entered into an agreement for 5 years, and for this 5 years this HP they promised to provide almost $990 million contract over the period of 5 years. It's ending in this September 2021. So their revenues from this segment is almost dropping, which also I will explain in a minute. So but then their other direct international business is growing, but the negative point is their DHC HP business, which is almost 27%, is decreasing every quarter. So that's something to watch keen on in this company. So let's have a look at their direct channel, how its growth has been over the past quarters. So their direct channel is growing pretty good, 4%, 3%, 7%, 5, 6%, 12%. They have a consistent growth quarter over quarter in the direct channel. And let's have a look at their revenues from DXC. So it was almost growing pretty good over the previous years, and currently now 12% down, 12% down, 14% down, 17% down quarter over quarter. So their revenues are decreasing from this DXC. So their revenue concentration will also be reduced, but then the negative point is it can even fall further. So that's a risk we have to consider. Let's go look at their share of revenue from DXC and directional. So in 2018 it was 70 and 26% from DXC, and 2019 it's 28%, and 2020 it's almost 20%, 24%, and it is expected to reduce to 16% in 2021 and 14% in 2022. So this has to be compensated by their direct international business, else their revenue is going to drop in the coming years. So that's something to watch on in this company. Let's have a look at their on-site versus offshore revenues. So their on-site almost accounts for 58%, and their offshore almost accounts for 42%. Let's have a look at their top client concentration, how their revenues from the top clients concentrated. So their top client almost accounts for 12% of their revenues, and top 2 to 5 clients is almost 27%, and top 6 to 10 clients is 11%. And if you look at the growth quarter over quarter, year over year, so quarter over quarter everything grow pretty good, and then top 6 to 10 clients it growth pretty huge, 31%. And if you look at the growth year on year, their top client is dropped by 8%, and then top 2 to 5 clients increased by 21%, top 6 to 10 clients increased by 31%. Also, if you have a look at their top 1 to 5, it was consistently growing. That's a good thing at 13%. And then if you look at the top 6 to 10, that's also growing pretty huge. That's a good thing. Their top accounts are growing. If you have a look at their $1 million clients, how it was going through. So if you have a look at their $1 million clients, so if you have the greater than $100 million, so in quarter 3 2020 it was 2, and currently quarter 3 2020 is also 2, and greater than $75 million it was 3, and they increased by 1, it's 4, and the greater than $50 million it's 5 and 5, and then greater than $20 million it's increased from 7 to 9, and then greater than $10 million it increased from 15 to 16, and greater than $5 million it increased from 30 to 35, and greater than $1 million it increased from 77 to 81. That's a good thing. And also they are focusing on large deals. If you look at the greater than $20 million deals, it's cumulative deals, it's also increasing over here, so that's a very good thing. Their deal size is increasing and their $1 million clients is also increasing. That's a good sign. Let's have a look at their new deals. So from December 2018 their new deals increased by 49%, and they got new business from next generation IT, it's almost 20%. It was before 16%, and then they have new XAAP and next ops, cybersecurity, DevOps, modernization, data. So the specialty division of Ardana Group, UK's largest independent insurance broker, has signed up Mphasis for a digital transformation engagement, and a Fortune 500 global consulting professional service firm specializing in risk and insurance services choose Mphasis to modernize their complex legacy platform in one of their divisions in a multi-year engagement. That's a good thing. They are also signing up new clients and new big clients, so that's also a good thing. And if you have a look at their direct wins, direct TCV wins, so it was almost their next generation or new generation. It was increased by almost 22% CAGR, and it was increasing at 25% CAGR in the past quarter 3 2022 to quarter 3 2021. That's a good thing. So out of the wins, almost 71% of Q3 21 deals came from new generation areas. Their new generation wins are witnessing increasing deal sizes, so that's also a good thing. Their deal sizes are increasing and they are also winning new deals. That's a good thing. Let's have a look at the type of work they do for their clients. So the first one is DevOps. So the one of the client is the global leader in health information systems. So their DevOps automation solution on AWS enable their client to provision the development pipeline in 10 minutes instead of days, thereby slashing operating cost and freeing the client's engineering teams to focus on core business analytics. And the other sector they are working on is also next generation app development. So they're one of the client, the largest US based logistic firm. They delivered a model driven design and next gen development of modern versions of applications in a self funded approach. This reduced time and cost of modernization by 25% and increased efficiency of operation by 40 to 50%, and it improved the time to market by 30%. Also the other sector, modernization. So one of the client leading North American transportation and logistic companies, they enable the client to build a digital business of the future and accelerate innovation through foundational IT platforms, enterprise automations, and the client achieved 40% faster time to market and 55% reduction in operating cost. And the next section is enterprise automation and a large global logistic firm. Their cognitive intelligence platform, Deep Insights, helped in optimizing trailer loading through image analytics. This helped them in identifying trailer loading with 99% accuracy and automated the manual examination process. And also they also work in application management services, and they are also leading US based medical device manufacturers. So they also implicitly scores from 60% to almost greater than 95%, and then they reduce the expenses by 42%, and they increase the application availability from less than 80% to almost 99%. That's a good thing. And also their infrastructure management services, they are working with a large European bank with global footprint, and they developed a compliant management framework for the clients infrastructure management and create standard templates for information gathering and task assignment. So the average response time improved from 43% to 92%, open tickets reduced by 65%, and their MTTR improved from 18 to 6 hours. And also they are working on next generation data. So they are working with leading US based medical device manufacturers. So they are also using their AI driven engine Deep Insights, enable their client to identify bad transaction in real time and generate predictive analytics recommendations. So they are also working in cybersecurity. So they are working with Fortune 100 bank holding company. So through their agile role based access management provisioning, they enable their client to achieve 100% identity and access management compliance and control of 10,000 plus SOX and non-SOX IT assets. So they are working in all of these sectors, and they have a huge clients behind these services. So that's a good thing. They are doing a good thing in the next generation IT transformation systems, and they are also doing a lot of digital business. So they are winning new deals. That's a good thing. So let's get into their financials. So however, their net revenue is increasing. So they increased from almost 5,000 crores in 2011 to almost 8,843 crores in 2020. So they are increasing their revenues. That's a good thing. And then if you have a look at their revenue growth 9 months from financial 18 to financial 2021, they are also increased at a CAGR of 10%. And if you look at in dollar terms, so they are also increasing in terms of 19% CAGR from quarter 3 2020 to quarter 3 2021. So that's also a good thing. And then if you look at their EBITDA margin, so their EBITDA margin was increasing and it's remained stable. So that's a good thing also. Let's have a look at their EPS growth. Their EPS growth 9 month financial 2018 to 9 month financial 2021, it's increasing at a CAGR of 16.6%. So their CAGR of EPS or the net profit is grows almost by 16.6%. And then if you look at their income statement, so they had a sales of 4,264 in October 2019 and they increased to almost 8,844 crores, and their net profit increased from 900 crores to almost 1,185 crores because their operating margin was pretty huge at the starting stage and now it dropped to almost 14% in 2016, and again their operating margin is increasing to 19%. So they are remaining more profitable, they're turning more profitable again. And if you look at their sales growth, the past 3 years it was 13%, their profit growth it was 14%, and their price CAGR was increased by huge 24%, 31%, and then their return on equity is almost 19% for the last 3 years, and last year is 21%. It is also improving. That's a good thing. And note that their profit is increasing by 13 14, but then their price is increased by 31 24. That's something to note on. So it's re-rating, the stock is re-rating and it is turning from undervalued to overvalued. So I will explain that in a valuation section. So then let's have a look at the balance sheet. So their total asset increased from 3,263 crores to almost 8,740 crores, and they have a reserves of 5,643 crores, and they have almost no debt, very less debt. And then let's have a look at their financial ratio. So what is their current ratio? Their current ratio is almost 2. That's pretty good. And then their debt to equity ratio is only 0.1. That's also a very good thing. And then they have an operating profit margin of 16% and their net profit margin of 13.4%, and then their return on equity is 21.4%. That's also a good thing. They are doing a pretty good job. And then if you have a look at their cash and cash equivalents, so they have almost 2,474 crores. That's also a good thing. Then let's have a look at their free cash flow. The free cash flow is also increasing at a CAGR of 14.7%. That's very good. I like to see free cash flow of any company. And then let's have a look into their shareholding pattern. So their promoter, I said that's Blackstone. So they increased their shareholding from 52% in December 2019 to almost 56% in March 2020. That's a good thing. At the right time, the corona crash, they bought huge amounts. And currently they are decreasing from 56% to almost 56.1%. That's slight decrease. And if you look at the historical FII holding, it's also decreasing. So it was almost 28.5%, and then since the promoter increased, share increased, and then their FII share decreased, but currently their FII holds pretty okay. They have almost a flat thing, so it's almost constant. It's decreased a bit, but it's not a lot. And if you look at the historical mutual fund holding in Mphasis Ltd, it was almost 7.8%, 7.5%, and currently in September 2020, 9.7%, December 2020, 11.4%. So mutual funds are buying. That's a good thing. And then if you look at the mutual fund shareholding changes, they are buying in May 2020, they are buying in June, July, August, September, they are buying a lot. October they are buying, November buying, December buying, January also buying. But they are not buying a lot, but still they are buying. That's a good thing. Let's have a look at their peer comparison in PE terms. So in financial year 2022 PE, if you look at the different some of their peers, so the Persistent Systems, it was trading at around 17 financial year 2022 PE, and then Mphasis, they are also trading at 18, and Mindtree 20, LTI 24, and Coforge 24. So they are also trading at 18 PE for 2022. That's not that bad. It's okay. But they have to do well in the coming year. If you look at their valuation, if you look at their price chart, it went up pretty huge from almost 600 rupees to almost now 1700 rupees. So they recently went up huge. They did very well, so that's a good thing for the already who is holding these shares. But for the new buyers, this much rise, that's not a time to buy at the peak. it still have some gas left to go up, but we cannot see like this meteoric rise again will happen again, because the valuation is almost coming to normal now as far as I see. So then let's have a look at their historical P. So it was almost 24 P at the top in October 2007, and it dropped almost to 8 or 7, and then it was almost ranging to 8, 7, 10, and then it increased to again almost 22 in October 2008, and then they again dropped to 8, and now they are almost sitting around 24 P, almost at their top. So that's not a wise time to buy. The best time to buy is at the top, but yeah, this company is valued correctly now as far as I see. It's not undervalued, it's not overvalued, it's exactly priced at the current price. So then let's look into their revenue projections in the future. Let's see their revenues in financial 2016. It was 6,000 crores, and 2020 it was 8,844 crores. I projected to reach 9,700 crores in financial 2021, and 10,993 crores in financial 2022, and 12,300 crores in financial 2023. And the revenue growth of 10% for financial 2021, 13% for 2022, 12% for 2023. And then if you look at the net profit, it increased from 632 crores to almost 1,185 crores, and I projected to reach 1,256 crores for 1 year, 1,430 crores for 2 years, 1,600 crores for 3 years, with a net profit growth of 6% for 1 year, 14% for 2 years, and 12% for 3 years. And if you look at the current valuation, for 1 year price target is 1,612 rupees, 2 years price target 1,838 rupees, 3 year price target 2,058 rupees, with the price cumulative growth of -1% for 1 year, 13% for 2 year, and 26% for 3 year. But I feel the 24p, that's good, it's correctly priced, but I would like to keep conservative P's. So according to me, I am calculating P of 22 with this company. So then in that case, the price target would be 1,478 rupees for 1 year, and 1,685 rupees for 2 years, and 1,887 rupees for 3 years, with the price cumulative growth of -9% for 1 year, 3% for 2 years, and 16% for 3 years. According to me, this is a good company. They are doing well. It had a downturn some years ago, and currently it is performing well, but the current risk is they have their DXC business, and which is going to due in September 2021. So after September 2021, they don't know whether the business will reduce from them or increase from them. So they are hoping that after that still they will continue with them. Some of the business will come from them, but they might eventually drop. So that's some risk, because that has to be compensated from their direct business, and if they are not doing very well, then there might be some fluctuations in their revenues going ahead. So that's one of my concern in this company. And also the price is correctly priced. So if for example, if some bad news happen, it can come down, because it was always performing. The price is also cyclical in this company, and currently the PE is 24, which is exactly priced. But I don't like to buy companies at exactly priced or rightly priced or overvalued. I would like to buy companies which are undervalued. I will not put my money in this company at this rate. I will wait for a pullback. If there is a pullback, and if there are better opportunities in the market, I will go for it. But at this price, I will not go and buy this share. That's all for today. Thank you for watching. And the financial disclosure, I am not a registered financial advisor. You have to do your due diligence before investing in any stock. And if you like my video, like, share, and comment. Also, if you like to have a free newsletter from this channel, please go and subscribe. In the description you can find a link to enter your email ID to get a free newsletter from me. Every month we are sending out a newsletter, so it might be informative to people. So if you are really like this video, like, share, and subscribe. And if you want a newsletter, also register for the newsletter. Thank you for watching, and have a nice day. Bye bye.